What's up, everybody? Ollie White, forrest.roberts here, coming to you live from Fairway Independent Mortgage in Minneapolis. Kind of a fun thing that we're doing today. We got the head of reverse mortgage here at Fairway Independent Mortgage, company-wide, Harlan Accola. Kind of a Q&A session. He's going to go break down some awesome facts kind of about the reverse mortgage. It's kind of a product that we don't talk a lot about, but it's super, super beneficial to a lot of people, especially right now. So very excited for it. And with that, let's kick it off.
Yes, and so you guys know, we are going to be doing two giveaways during this process as well. We got two books here that go a little further in depth on the home equity reverse mortgages. One of them is Reverse Mortgages by Wade Pfau. The other one is actually written by Harlan Accola himself.
Nice.
So yeah, that's a good way to get home equities and reverse mortgages.
Yeah.
It's fun.
Phenomenal books. If you're interested in the slightest, I'd recommend reading both of these. I actually have as well. So
Same.
All good content. Super pumped. Harlan is the godfather of reverse
Yes,
mortgages here at Fairway, so very excited to get this thing going.
Definitely. I'd say without further ado, let's kick it off to Harlan. Harlan, take it off. We're excited to have you, man. Thank you.
Hey, thank you. It's exciting to be here, guys. No more favorite topic for me to talk about other than my grandchildren than reverse mortgages. Speaking of grandchildren, I'm going to tell a little story that's very beneficial to real estate agents. And if you're a real estate agent and you're watching this, I'm going to give you a little disclaimer. If you don't want to pay more taxes next year because you made too much money on commissions, then you should sign off on this Facebook Live right away and don't listen to any more, because this will increase your income. And then that means you'll have to pay more taxes because you made more money in commissions. So that's kind of I'm joking a little bit, but not very much. Anybody that applies what I'm talking about here will do better at listings and sales, especially in this tight market, because a lot of the people that should list their house are old people like me with gray hair that are, I'm selling my house. There's an inspector and appraiser coming tomorrow on my old house that I've lived in for 30 years. And it was a listing that the realtor here in Wisconsin got because guess what? I wanted to move to Edina where my kids and grandchildren are. So that is repeated thousands of times over, because why do I want to be in a 6-bedroom, 4-bath house where we raised our kids? It's too big. I mean, my goodness, I couldn't even find my wife in there sometimes when I was looking for her. That was for when we were raising kids. But when it's the two of us, why do we want a big house? There's all kinds of people that don't understand that they can move and that they should move. But what's interesting is when I ask people these questions right here, what's your opinion of reverse mortgages? Invariably, there's more people that check number one. Not good, to tell you the truth. I don't have a good attitude about reverse mortgages. And then some people say, well, it might be all right for some people that are broke. And there's only a few people that say, I think I'll get one when I'm old enough. Next year in April, I'm 62. I'm getting my reverse mortgage on my house in Edina because I could buy a bigger house that was more expensive in Edina, which is obviously more expensive than where I lived for the last 30 years in central Wisconsin, because of a reverse mortgage. So I want to have you have a very open mind about the stuff that we're going over. And I want you to tell me in the chat box or in the comment section, let me know, why don't you like reverse mortgages? Why would you not want one? Because a reverse mortgage is cool because it doesn't have payments until a year after you're dead. You can make payments whenever you want. You can make them once a month, once a year, once every 3 or 4 or 5 years, whatever. That's a pretty cool mortgage to have because you don't have to pay every month. You pay when you want to, which is really kind of weird. And people wonder, well, how's that even possible? There's been a ton of research on this done outside of the mortgage industry and the financial planning industry. It is incredibly beneficial. By the way, I do not need a reverse mortgage, but I want a reverse mortgage. And that's what a lot of people think, is that you don't get a reverse mortgage unless you need it. And that's not true. It's like saying, well, I'm not going to buy a car until I need it. Up until then, I'm going to ride my bike. Well, it's a lot more efficient to have probably a bike and a car, but it's very difficult to get by in this world without having a car. And so you don't need a car. I mean, I live in an area in Wisconsin for the last 30 years where there's a bunch of Amish people and they have horse and buggies. So you can exist, you can live without a car, but and you can live without a reverse mortgage in retirement, but it's not nearly as efficient. And that's what we're going to talk about today. Fairway, and by the way, as a real estate professional, I always ask these three questions as well. Do you almost always talk to your senior clients about reverse mortgages? That's very rare, unless they've been to one of our classes and work with a financial or work with a reverse mortgage planner at Fairway. They rarely talk to their client about reverse mortgage. And then a few more say, well, once in a while when I see there might be a need, but most people say never. I don't really think they can help my clients, and I don't think they're a good idea. And so I always ask people, why haven't you talked to your client? And I hear five things. Why? The closing costs I heard were too high. Some people say, well, this is too big of a down payment. Some don't like FHA loans because they're more of a hassle. And some people say they're just complicated. And I don't want to recommend something I don't know much about. And some people say, I didn't even know they existed when it comes to reverse for purchase. They think it's something you get in a refinance, but you can also use a reverse mortgage when you actually get the house. Now let's cover some immediate fallacies and misconceptions about reverse mortgages. The first thing that people say is, I don't want to do that because the bank takes the house. I mean, seriously, do you really think the bank wants a house? How many banks do you know that relish in doing a foreclosure and taking people's houses away? Fairway has no interest in taking anybody's house away. We don't want to own houses. We're not into being landlords. We are lenders that lend money and collect interest. We are not interested in being a landlord. So we don't want your house or your client's house or anybody's house. We simply want to put a lien on the property, just like we do with a forward mortgage, and collect the interest when you pass away. It's very unique. You don't have to pay monthly like you do with a forward mortgage. You got to pay once every 30 days. Here, you pay whenever you want to, and then we just collect the interest at the end when you sell the house or permanently move out or pass away. A ton of people say, well, they're just too expensive. A reverse mortgage is not a whole lot more expensive than a forward mortgage. There's one big difference, one huge difference, and that is that there is a 2% fee on a reverse mortgage to pay for mortgage insurance, which guarantees that no matter how long you live, no matter what happens to the value of your house, you will never owe more than the value of your house, even if you never make any payments and you live to be 150. That's an incredible guarantee, and there's a cost for that. The cost for that guarantee is 2% of your home value. So if you had a $400,000 house, it's going to cost you $8,000. You say, wow, that's a lot of money. Well, is it? You don't have to make any payments ever. Yeah, you got to put down about 50%, but then you never make any payments. It's the cheapest way to own a house in retirement. Absolutely the least expensive way to own a house in retirement. Well, and then a lot of people say, well, my kids are just going to end up with a problem. The kids are going to get a big bill. And, I mean, maybe my kids should pay some of my retirement, but I don't want them to end up with a big bill. Your kids cannot end up with a bill. They can only end up with equity. So if you got a $400,000 house and you've spent $300,000 and you pass away, well, the kids get the $100,000 that's left. By the way, what's the difference between that and you got a $400,000 IRA and you spend 300 of it and there's $100,000 left? Same deal. So really, when you think about it, it's no different than your bank account. But people attach a whole different level of value to equity as compared to cash. It's really weird. And then some people say they're risky, they're dangerous. My goodness, this loan is more regulated than any other loan out there. It's a Federal Housing Administration loan. So we are heavily regulated by the CFPB and FHA and Ginnie Mae and everything else. So it's not like you can rip people off with this loan any easier. In fact, it's harder to rip somebody off with this than it would be a forward mortgage, even if you broke the law. So let's talk about the perfect storm that's going on right now with people my age. So I want to be by my kids and primarily by my grandchildren. I've got one son that lives in Eden Prairie and another one in South Minneapolis and another one out toward Shorewood and Excelsior area. And then another one that lives in Bloomington. All four of the sons are behind, and my daughter-in-laws they're all married. So we got 4 daughter-in-laws and we have 4 grandchildren. So where do you think I'd want to live? Within 15 minutes of my kids. So I got to sell the house in Wisconsin and buy a more expensive home in the Minneapolis area, because obviously it's more expensive to buy homes in Minneapolis area than it would be to be in Wisconsin. So that's really the factor that people have to be aware of. So there's a whole bunch of us. And here's where I want, this is where you're going to look at your business differently than you ever did before, because this is some really strange demographics. Let's take a look over at the right side of the screen. Those are the people from 60 to 80. There's a lot of us, 10,000 a day turning 62. Gen X is in the middle, and then you got the millennials over on the left-hand side, and everybody chases after the millennials. Let me give you an example when it comes to real estate agents and even loan officers and the attitude that they have toward us old people with gray hair. So all four of my sons have bought a house. I went to the showings of the houses that they were buying with all of the kids, because obviously they wanted my opinion. I'm I'm a loan officer and I'm in real estate, been there since the 90s. So obviously they come to me for some advice and stuff. So let's take a look at the houses and what do you think, Dad? And so on. So my wife and I show up at these showings on the house with three different realtors, because three sons bought a house, and I'll get you to the fourth son in a minute and explain that. But all four sons are in a house now, but three sons, I went to their showings to help out with the kids and stuff like that and look at their house. So I drive into the showings with a Wisconsin license plate on my vehicle, and I walk in to help my kids make a decision on this house. In most cases, hanging on to one of the grandkids to give my kids a better chance to look at the house. Now, as a real estate agent, don't you think that that would trigger a question? Nice to meet you. Are you Luke's dad? Yeah, I am. I see you drove in with Wisconsin plates. Do you live in Wisconsin? Yeah, I live in Wisconsin. That's a gorgeous granddaughter. I mean, she's really a cute little girl. Have you ever thought about moving up here to the Minneapolis area? Do you know how many realtors ask me that very basic prospecting question? Zero. None of them. Isn't it obvious? I was shocked. I was absolutely shocked. It wasn't that I was mad at him or anything, but why are you just focused on these millennial kids and you don't even care about the fact that I'm probably going to be moving to the Minneapolis area because of my cute kid that I'm holding, my grandchild, and because I want to be by my children and my daughter-in-laws and their families? Really? Not one of them. So when I was ready to buy a house, I called up a Fairway loan officer and said, "Hey, who understands old people?" "Oh, that's easy. That's Susan." So I called up Susan and said, "I'm looking for a house, and I'm not in any hurry because I'm not 62 until 2022. But find a good deal, and we can find a house. I can own two houses at the same time. I'm eventually going to sell my house in Wisconsin." Susan went to work and within a couple of months found me a house. She got a bigger commission on that house than any of the other three kids. And then she asked me, "I understand that one of your sons don't have a house yet. And would he be interested in getting a house?" Because he moved in our house during the pandemic because we were in Wisconsin most of the time. And so it was kind of an empty house. And we wanted him to move out of downtown Minneapolis, which, what was going on there last year, and take care of our house in Edina, which he did. And then Susan talked to him, and then she took him out and showed him some houses with his wife, Bridget, and they bought a house and closed on that in Eden Prairie just a month ago. So she got two commissions because she understood reverse mortgages and she understood how demographics work. Why would not any realtor understand that? The vast majority, I travel all over the country. I was just in Phoenix where there's a whole bunch of old people like me. I fit in really well. Everybody's got gray hair there. And I was in Phoenix and I was talking to a room full of realtors and asked them how many of them talk to their millennials about whether or not their parents are going to move down to where it's warm because they live up in Minneapolis where it's cold. And now their kids moved down to Phoenix. And how many of them do you talk? They didn't either. I mean, that is a very basic listing scenario. And how many realtors asked me when the last kid left in my hometown, and many of them knew me because I was in the real estate business, the mortgage business, closely related to their real estate business. How many realtors asked me if I wanted to list my house? Zero. I mean, it only makes sense that old people want to move out of their old house. All the people on the right side of the screen, which is a bunch of us, and guess what? We are in a situation where we have fewer pensions and defined benefit plans. We've got a tougher time retiring than any other generation before us. When my dad retired, interest rates were at an all-time high, and he could get 15, 16% on CDs. I was paying 16, 18% on mortgages. There's a very low return on investment. Most people are looking at delaying retirement. The majority of baby boomers have a whole bunch of equity in their home. I'll walk away with a big check from my home in Wisconsin when I sell it because I've paid into it for a lot of years. And yet we're in a little bit of trouble because most of our wealth, as a statistic overall, not necessarily me specifically, but as a statistic overall, if all the baby boomers retire at 62, 84% are in jeopardy of running out of money if they don't do something with their mortgage. And if they all wait till 66, 50% are still likely to run out of money. Boston College did that research. It's downright scary because so much wealth is crammed into people's houses. There's $8 trillion sitting in seniors' equity. You're more important in helping people decide to get houses and what kind of house they should buy than most financial planners are, because you're dealing with a majority of people's wealth. I mean, it's crazy. So let's look at the mechanics of how a reverse mortgage works. But before I go there, let me just explain something really simple. I ask a lot of people, do you think your home is a good investment? And I ask real estate agents, do you think a home is a good investment? Do you think it's a good idea to buy a home and as an investment? And you know what they all say? Absolutely. I mean, I just talked to somebody out in California, and they've got a house that they bought for $239,000 30 years ago, and now it's worth $1.4 million. And they said it's one of the best investments that we ever made. Really? Is it a good investment? Well, theoretically, of course it is. But let's think about it. It's not a good investment right now because they're still making a mortgage payment into that house, and they're fixing the roof, and they're taking care of the taxes and the insurance. It's a horrible investment. It's costing them a whole ton of money, and they're getting nothing out of it. They're not getting a check from their house. They're putting checks into it because they still have a mortgage at 68 and 72. Really? So let's think about this. Everybody's got three buckets of wealth. Bucket one is your ability to make money. What W-2 wages, commissions, pensions, own a business, whatever. Bucket number two is your nest egg, money you give to your financial advisor. So you're talking about 401ks and IRAs and stocks, bonds, and life insurance, savings, whatever. So you try to maybe put away 5% of your income or $10,000 a year or whatever. You try to dump that into bucket two. What about bucket three? Well, that's our house. Okay. And sometimes people are putting 25, 30, 35, even 40% of their income gets dumped into bucket three of their gross income. A lot of money goes into bucket three. I just saw there was a house listed out by Excelsior, and my goodness, it was listed for $15 million. Wow, that's a pretty high debt ratio, even if you're making $100,000 a month. So anyway, the bottom line is we put a lot of money into bucket three. Now, here's the whole investment thing. You encourage as a real estate professional, I encourage as a mortgage planner, you should buy a house. I told all four of my kids, go and get a house. I mean, it's an important investment, but it's not a good investment unless we understand how to use it. So when my son bought his house in Eden Prairie, he's driving home, he calls me up, he says, hey, we're ready to move, come on over and help us move. We got the keys, we closed the loan, everything's cool. We're all excited. We're now homeowners. And he said, by the way, Dad, I just started on my reverse mortgage. And he's 31 years old. And I had to think for a second, but it's like, right, he did, because he's going to put money into his house. And when he gets older, he can take it out. In 31 more years, when he's 62, he can pull the money back out. So that's exactly what I'm going to do. In a year, I'm going to be able to stop putting money in, and I can pull money back out. So if I put money into my 401k or my IRA, I would expect to pull money out when I get older. Why can't we do the same thing with a house? Why don't we sell it as that? Sell it to a 31-year-old and say, this is cool. This is this is part of your retirement. You're going to put money in, and then you're going to get money out when you get older. Why don't we think about houses in that way? I was talking to Larry over the back fence of my son's house a couple of weeks ago, and he introduced himself and said, you must be the new neighbors and everything. And I said, Larry, when did you move in? He said, 40 years ago. I said, how much did you pay for your house? He said, $40,000. It was brand new. Well, it's now worth $450,000, more than 10 times as much, but he's still making payments into it. And his wife recently moved out. Gray divorce is a big problem. His wife recently moved out, and now he's got to pay her off. House is a liability. It's not a benefit. But if he understands the reverse mortgage, he can make it into a benefit. he can pay his wife off by using a reverse mortgage. If they were both together, they could pull money out and travel together. Maybe they should try to do that instead of getting a divorce. I don't know. But anyway, the bottom line is, hey, we really got to pay attention to this, because this is, and we got to explain to people that, hey, this is an awesome deal. You're putting money in, and when you get older, you can take it out. Because when you get to that bottom retirement wallet, the post-retirement income, you're pulling money out of Social Security, but you're not making as much money usually in your 60s, 70s, and 80s, 90s. You're relying more on those types of things. And you're pulling money out of your 401k and your IRAs. Why can't you pull money out of your house, or at the very least, not put more money into it? Because you got to pay taxes, insurance. Why not use the house to pay the taxes, insurance, pay for the new roof, pay for the new siding, whatever. So we need to rethink what our houses are. They're not just a place to store money and give to the kids when we die. How many kids move into their parents' houses? Like 1 or 2%. It's crazy. They want the money. They're going to sell it. They're not going to move into the house. What if there's 3 kids? Are they each going to all move back into their old bedrooms that they had in high school? I mean, really? It's weird the way we think about that. I want to give my house to my kids free and clear. Why? Why do you want to give your house to your kids free and clear? Why do you want to pay off your retirement home? And that's why you only want to buy a $250,000 house when you can afford a $500,000 house. So let's talk about the mechanics of how that works. So if I'm 62, I need to put down about a 55% down payment. If I'm 72, about 50% down. If I'm 82, about 40% down. And then I'm done making my mortgage payment. And this varies. You may have heard different numbers on this, but it depends on what the interest rates are, and it depends on what's going on, of course, with your age. So if I'm 62 and I got to put down 55% down, that means if I'm buying a $400,000 house, I put down a little more than 200 grand, I'm done making a mortgage payment for the rest of my life. That is incredible, because I just bought a house for half price, cash flow wise, and I never have to make another payment, except for, of course, taxes, insurance, and your regular maintenance, just like you would with a regular house. It's really that simple. You put down 50 on a purchase, you put down 50 or 40 or 55%, depending upon where you're at. So it's really crazy. Why are we not looking at this in a different way? Because why would I put down 100% and pay cash for a house when I don't have to? Because the interest rate's really cheap. We're around the 3% range, even on reverse mortgages. That's a pretty good deal. So let's look at this graph. A house in retirement, how much does it cost you? What's the single biggest expense in retirement? Single biggest expense is housing, unless you're really wealthy. And if you're really wealthy, your single biggest expense is taxes. But let's just assume that your client is middle America and they're buying a house in retirement, and the biggest expense is going to be their housing expense. Let's say they're walking in with 300 grand that they've got from selling another house. Well, they only have to put down 120,000 and then finance the rest and have payments of $2,100 a month at 3.5%. It's a little bit cheaper now, but in that range. Well, I'm going to pay back $900,000 if I live to be 92. I'm paying back $900,000. Even if I live to be 82, I'm paying back at least 6 or 7. It's $2,100 a month every month, no matter what. What happens if I die and my wife's got to make that payment now by herself? That's not very good. A lot of people make that mistake. Oh yeah, we can afford it. We're bringing in X number of dollars, and then somebody dies and it changes everything. Well, I can do a cash purchase. I can take my $300,000 from my other house, and I can pull another $300,000 out of my investments and pay cash, and then I don't have any payments for the rest of my life. Is that smart? Well, what was I earning on the $300,000? 6, 7, 8%, 4%? If it's anything over 3%, why am I pulling money out of there to pay off a 3% loan? That doesn't make any sense. The math will not come out no matter how many times you figure it. So what's the smartest and cheapest way to buy a house in retirement? With a reverse mortgage loan. I walk in with $300,000, 330 to be exact, and I walk out with a $282,000 loan, and I'm done making mortgage payments for the rest of my life. Unless I want to for tax purposes, which I might do that, but I don't have to make a payment. If I make a payment, I can get the money back as well. So the smartest way, and I've argued this with a lot of people that are smarter than me, but they find out that they just got a mental block. And they say, well, no, it's really better to pay cash for a house. Show me the proof. It's really better to finance a house. Show me the proof. Because I've looked at the numbers with hundreds, thousands of scenarios, and many people have tried to prove me wrong. And guess what? It's not wrong. You should not ever think about just paying cash for a house, at least finance it, And if you're going to finance it with an optional payment mortgage, because you can make mortgage payments if you want. And if you don't want to, you don't have to. Now, make sure as we go through this, on any questions in the chat box or any questions in the comments, I want to make sure that I cover this for you as well, because a lot of people say, oh, just a minute. What about this? What about that? So let's look at the mechanics of how a reverse mortgage works. First of all, you have to be over 62. So, or married to somebody that's over 62. That's your option. So that's a big requirement. So my son cannot get a reverse mortgage, but he can get a forward mortgage, pay it down, and then get a reverse mortgage 31 years from now, which is what his plan is, of course. This is an FHA program, so it's got to be an FHA qualified home or condo, which is not hard, but you got to check into that. And this has got to be your primary residence. You got to live in it for more than 6 months out of the year. So this doesn't work for rental properties. It doesn't work for vacation homes. You can pull money out of your regular house and purchase a vacation condo down in Florida or something like that if you want to, but you don't have to. So several different options there. And it will never affect Social Security and Medicare benefits unless you're on Medicaid. If you're on Medicaid, you got to handle things a little bit differently. Now, remember this all important thing. You keep the title to your home. We do not own the house. We give you a $200,000 and we put a lien on your property for more than the $200,000 because we know that the balance will probably go up. But whatever amount you owe at the end, whether you paid it down or ran it up or whatever in between, that's the amount you owe back, not the value of the house, because maybe the house went to $800,000 and you bought it for $400,000. Well, that extra equity belongs to you or to your children, not to us. We don't own the house. You own the house. No, there's basic credit and income qualifications, but much, much easier than regular loans because the payment is always zero. So we just got to make sure that you're going to be able to afford the taxes, the insurance, and the homeowners association or whatever. So the real estate taxes are a big deal. We want you to pay those on time. Why? Because if you don't pay them on time, we got to foreclose. And if you foreclose on old people like me with white hair, it doesn't look very good. So we don't like to foreclose on people. So we want to make sure you get enough money to pay your taxes. That is a huge, very, very important issue. Now, how much cash do you get? Well, anywhere from about 45 to 70%, depending upon how old you are. The older you are, the more money you get. And so a lot of people say, well, I'll just wait until later. No, the quicker that you can eliminate a payment on your house, the better off you are. That's why I'm doing my reverse mortgage the day I turn 62. I already bought the house with a forward mortgage, refinancing it into a reverse next year, the day I turn 62. Now, remember, there's never a monthly payment. It's always optional. You're still responsible, of course, for the maintenance, the taxes, the insurance. Don't forget that because you own the house. Even if you had your house paid off, you'd be responsible for maintenance, taxes, and insurance. So it's nothing extra. It's just the normal stuff. And then you never make a monthly payment unless you want to for tax purposes. We'll more on that later. Now, there's no repayment required until the market goes down. No. Until you owe over a certain amount. No. When is the first payment required? A year after you're dead. I mean, that's incredible when you think about it, until the last living borrower permanently leaves the home. Even if you go into a nursing home and you come back, you still have the house and you don't have to make any payment. Or, of course, if you sell the property, you say, I'm getting out of the Minnesota winters, the kids moved down to Arizona, I'm going to also, okay, then you sell it and whatever you owe is paid off. And whatever the difference is, you take down and do another reverse mortgage in Arizona. So the equity is still there, belongs to you. Now, of course, we talked about the purchase for anywhere from 45 to 70% down, depending upon, of course, your age and the interest rate factors. So how do I get money out of a house? So if my son's going to pay money into this house, how does he get money back out? Well, you can take it out in a lump sum, or you can take out a line of credit if you don't need all the money right now. A lot of people do that. They say, well, I already got my house paid off. What do I do now? If you got your house paid off, set up a line of credit. Line of credit is wonderful. It grows. It's non-recourse. It's guaranteed money that's available that you can pull out whenever you want for whatever you want it for. You don't have to tell us what you're going to use it for. And then, of course, you can get a monthly check. Just like you pay in monthly, you can get a monthly check back. Now, of course, the lump sum is the most often thing used with a regular purchase because you're pulling out 200 grand and we're bringing in 200 grand. So you got a $400,000 house with those two scenarios there. Okay. So from a real estate scenario, why are people moving and who do you have to pay attention to? Number one, the thing that I talked about. I didn't move to Minnesota for their wonderful winters. I didn't move to Minnesota for the great tax situation. If I wanted a great tax situation, I would have went to Florida or I would have went to Texas because there's no state tax there. I didn't move to Texas, or I didn't move to Minnesota because it's the cheapest place to live, like Arkansas, or some Mississippi, or some cheaper place to retire. I didn't move there for the mountains, like Colorado. I didn't move there for the ocean, like either the coast. I moved there because the kids were there. I wanted to be closer to family, the kids and the grandkids. Number one reason people move. Number two reason to move is because they want to save money. What better way than to buy a more expensive house and not have a house payment? That's a great way to reduce home expenses. Change in health status. The 2-story house doesn't work anymore. Got to get everything on one level. Guess what? I can still take the steps 2 at a time. I'm kind of proud of that fact at 61 years old, but I may not always be able to take the steps at 2 at a time or 1 at a time. So the house that we bought in Edina, all in one level, so we can live there for a long time, even if we're in wheelchairs. It's a big deal. Pretty darn important. So make sure you're talking to your senior clients about when you're moving. Are you really considering what's going to happen 2 years from now, 5 years from now, 20 years from now? Make that plan, because a lot of people are in the wrong houses, and you need to get a listing for them and get them out of that house that they should not be in anymore. Change in marital status. This is a huge deal. If you don't have a divorce attorney as one of your partners, get one, because there's silver divorces running rampant. It's double the increase of any other demographic. It's crazy. And you need to make sure that you're there so that people don't end up screwing up their financial situation because they went out and paid cash for a house. They went out and took out a big mortgage that they can't really afford long term. If there's a change in marital status, you and us should be involved. You need to talk to Forrest and Tom as soon as you see one of these divorce deals to be able to help you out from there. Empty nesting, children moving out, and so on. Now, that brings up an important point, because Tom and Forrest are right there in the south of the city in Eden Prairie, right there to help you with these scenarios. It's not something often an 800 number. Both forward and reverse mortgages covered either way. Now, how many retirees have moved or anticipate moving and retiring? 27% are planning on moving in the next 10 years. Wow, that's a ton of listings. That's tens of thousands, hundreds of thousands of listings across the country. You need to be talking to people right now about why they want to be in the house that they're in. Get some listings. We desperately need some listings. And guess what? They're not all moving to a trailer house somewhere in Arizona or a trailer park out in St. Cloud. No, there's only 51% that get a smaller home, 30% get a larger home, and 19% get the same sized house. So this is not something that is a big reduction. So let's look at a couple of examples and say that I want to upsize. I've got a house in Wisconsin for $197,000, and I sell it. Let's say I sell it for $205 or whatever. And I walk away with $197,000. I can move to the other place, use $197,000 for a down payment with no monthly mortgage payments, except for, of course, taxes, insurance, maintenance. And I can buy that house for $400,000, and I never pulled any money from anywhere else. See how James and Mary smile? They are thrilled about this deal. James and Mary are better off. So are their kids, because James and Mary bought a $400,000 house in a nicer area instead of a $197,000 house in a cheaper area. Pretty important to understand what the deal is on there without dipping into their savings. This is kind of a little purchase power thing that is also in our brochure that Forrest and Tom can give you so that you know what's going on there. What about downsizing? Cindy wanted to buy a $375,000 home close to the grandchildren, not a big downsize, but a lot smaller house than what she had before. So she ended up just like we bought a little smaller house in Edina than what we have over here. But in that situation, Cindy can continue to live in her current $400,000 home away from any grandkids. She can't go out with them in the evening for ice cream or anything. She's too far away. But if she moves closer, she can go ahead and do those ice cream runs. $375,000, and she's only got to pay down, guess what? $172,000. She's got an extra $227,000 to spend on investments or gifting or whatever, depending upon what her wealth is otherwise. I mean, this is a huge deal. Now here's a really important thing, and we're running out of time. We're almost to the top of the hour. But here's a really important thing. The reverse mortgage line of credit. When we set this up, You start at, let's say, a $200,000 loan, and then it goes to 210 and then 220 and so on. It just keeps going up depending upon, the rate of interest and so on. But if you make payments, let's say I go from 200 to 250 and I got $50,000 worth of interest accrued because I haven't paid for 4 or 5 years, whatever. So I got $50,000 worth of interest accrued. I make a payment out of my IRA, which I have to report as income, 1099, put that money in to my house with 50,000 of the interest, and a 1098 kicks out because this is acquisition indebtedness. It's the money that I used to buy this house. I completely canceled out the taxes on that $50,000. We've dealt with many people who sold their old house that was paid off, bought a new house, which was their brand new acquisition indebtedness. And guess what? They ended up getting a massive tax deduction set up for them to get a whole bunch of money out of their IRA. Big deal. Okay. Quick rundown: property eligibility. You can go to up to 4-unit rental properties as long as you live in one. Manufactured homes built after 76. Of course, condos, townhouses, planned unit developments, even houses in a trust, except in Texas, but we're a long ways from Texas. Seller cannot pay for anything else, nor can the lender, nor can the realtor, except for, of course, owner's title insurance and home warranty and all that sort of thing. Now, we can deal with new construction on the builder program. That's an excellent scenario when they're moving into any kind of HOA. Big advantages there. We go through the financial assessment. As I said, it's much easier to qualify for a reverse as compared to qualifying for a forward. But that's just a little bit of an example between those two. So you need to kind of change your mindset and realize that, hey, this is a pretty darn good FHA program, and let's take a look at what's available there. So let me just kind of fast forward to the end because we're getting real close to the top of the hour. And I hope if we had this in a poll situation, it doesn't work as well with Facebook Live, but has this changed your mind about reverse mortgages? I hope that nobody would check number one. Number two, make sure we get you in there at least. Maybe the window's open a little bit, but we want to get you to number three. This will change your life and your client's life, change your business. And this is a bigger deal than what you thought it was. It's a huge issue. So here's my contact information, but I don't do loans. I just talk. I do the easy part. Guess who does the hard part? Well, that would be Forrest and that would be Tom, that are right there in Minneapolis. I live in Minneapolis too. I'm over in Edina, so I can help with the ideas, but they're the ones that actually do the loans. And it's a pretty cool deal that they'll sit right with you, walk you all the way through the process, and make sure that things happen from there. So they're going to share their contact information here very shortly. And I'm ready for any questions because I know we're getting right to the top of the hour and want to cover that. So back to you, Tom and Forrest, and any questions for me, anything that I can help with.
Harlan, that was great. Thank you very much for coming, providing all those great nuggets of information about reverse mortgages. We do have some questions, but real quick, I just want to remind all the viewers that we have 2 books that we're giving away here. If you want to enter in that contest, please comment in our comment section, and we will make sure to reach out to the winners and get those to you. But let's go back. So the first question here that I have is, can somebody use a reverse on their free and clear paid primary to buy like a cabin or a vacation home or something like that?
They can. In fact, we've done that a number of times where somebody pulled money out of, let's say you pull out $400,000 out of your house in Edina that you got paid off, and you buy a house up north, and or a condo in Arizona or a house in Florida, whatever. The awesome thing about that, Forrest, is that you've got 2 houses and all you got to do is pay taxes and insurance, and you have no payment on either one. And you don't touch your investment money. And guess what? The kids get a bigger inheritance because they're inheriting 2 houses rather than just 1 house. So huge opportunity. I should have highlighted that. Thank you for that question. That's excellent.
Yeah. I mean, that just seems like a win-win-win for everybody.
It's one of those things that we call a no-brainer.
Yeah, exactly. Going on to the next one. So kind of different side of things here. Can you use a reverse to save somebody that has or may be going into like a foreclosure situation?
We can. I want to be real careful how I answer this
Right.
because our for so many years the reverse mortgage was used as a loan of last resort. It was used as something for people that were broke, something for the apps. If you're breaking the change jar and you're eating dog food, maybe it's a good idea to get a reverse mortgage. There's people that have told me that. When I get to be eating dog food, then I'll call you about a reverse mortgage. Really? Why don't you just call me now? Because it's a lot better deal if we do it right now. So the issue is this: if somebody has let the car go without an oil change for too long, and their retirement car is smoking on the side of the road, and there's some trouble, and yes, we can come in. We just helped a lady in Chicago. Her husband died. He took care of all the finances, used up a lot of money before he died, and she was in foreclosure, and she's ready to lose her house within weeks by the time we got involved, and we kind of saved it right before the sale on the courthouse steps. um, and that's a situation that's absolutely critical, where we rushed in and we were able to save her with a reverse mortgage with no down payment, just using her existing equity. And fortunately, she is still in her house and has no payments except for her real estate taxes and her insurance. She could not be happier that we were able to preserve that house. So, without question, we can't do that every time. Sometimes it just went too far. Too many fees got wired up with all the attorney fees on the foreclosure, and there's not enough equity left. But if we can get into some of that stuff earlier rather than later, this was a tough one in Chicago, but we can certainly do that. And anytime that anybody's running into that, they just simply need to give you guys a call and say, hey, can you help with this? We'll give them an honest assessment.
Yeah, wow. I mean, that's a crazy story, and I mean, great that we were able to get it done and help everybody out. So
Well, imagine that poor lady.
yeah,
Where are you going to get a loan when you're in foreclosure? She's got a 2.5% rate on her reverse
wow.
mortgage when she had a credit score in the 400s, and in foreclosure. And we got her a reverse mortgage. I mean, that definitely sounds too good to be true.
Yeah, it really does. But glad we can do it. So yeah, if that situation is around in anybody's life, reach out to us. We definitely take a look and see what we can do. I guess so. Your other side, so kind of like the flip side of that is using reverses to I guess you would more recommend using reverses to help grow your portfolios or use your funds, so you're not having to dip into portfolio funds, retirement funds, or things like that, but use the reverse to help ease up on your monthly obligations as a living standpoint, correct?
Yeah, there's something called the cost of living. I mean, it just costs money to live. That's all there is to it. And the only time that you don't have to pay to be alive is after your funeral, and you got to pay for a funeral, and then you're done. But up until that point, you got to pay something all the time just to live. I mean, fortunately, you don't have to continue to pay rent and gravestones. Maybe they'll figure out how to charge you for that too. But so it's cost of living. So the question is, where do I get the money to live? There's really only three options, other than somebody giving you money. But where do I get the money to live? Well, I can pull it out of I can go to work and work, so I get paid a paycheck, and I maybe don't want to do that when I'm 85 or even 75 or 65. The other option is I can pull money from bucket two, my investments. But if my investments have historically done 6, 7, 8%, why would I pull it out of my investments? So the house is the cheapest place to get money. So why do people take so long to get that money? It's the cheapest money. So get that money first, because you can get it even without working, because you've worked hard to put it in there. So you're just pulling it out. So absolutely, it's not a loan of last resort thing. It's just, hey, this is part of my plan. Put money in there, and I'm taking it out, and it's cheap money. Do your kids get less money? Well, sure they do. But the only way you give your kids more money is to die early. And if your kids want you to die early, you should disinherit them, if they're just after your money. So what it really comes down to is where's your cheapest money? If you incorporate this in as part of your planning, you are going to be better off, and your kids are going to be better off.
Makes complete sense. Complete sense. So one more question, and then I got a quick comment here after this. But so for any realtor, any agents out there watching this, what is a good strategy that they can use, maybe with like their sphere, past clients, or anything like that, to bring this up to try to gain some interest and some traction?
Well, the first thing I do is take a look at your database of every single person that is having a problem qualifying for a house, getting a house, people that are kind of like no sales, so to speak, that, they're interested in doing something, but they can't really find anything. And they don't want to go from a $400,000 house to a $600,000 house, because even though it's closer to their kids and less maintenance and everything else. So take a look at that first. The second thing, and maybe this should be the first thing, and this is the best way to get listings. Every single millennial you deal with, for goodness sakes, ask them about their parents. I can't believe the number of people that what I started with that never asked me. You need to, every time you meet millennials, if there's a married couple and you got two millennials there, hey, there's 4 parents there potentially, maybe more if there was a divorce. So there's 4 or 6 or 8 parents. I mean, why aren't you prospecting amongst the people that already trust you? They trusted you enough to sell your house. Ask every single person in your database, hey, just wondering how you like your house. Sold it to you a year ago. Is everything going okay? You get through COVID all right? Great. Hey, just wondering, how are your parents doing? Do they live here? Are they thinking about moving here? You'll pick up a whole bunch of listings and sales simply because you asked that very basic question, how are your parents doing? I can't stress how important that is. And no realtors do that. You're not going to have any competition. It's nuts. And the third group that you want to go after is take a look back, depending upon how long you've been in the business. Let's take a look back over your 5-year career, your 10-year career, 20-year career, or whatever, and say, how many people here are over 62 that have their houses paid off by now? And they're people that should list the house that you sold them 10 years ago, 20 years ago, whatever, depending upon, again, how long you've been in the business. Why on earth are you not going back to those people and say, did you know that you can move and you can reset your acquisition indebtedness so you get a big tax deduction and you can have more cash flow in retirement, pay less in taxes, and leave a higher, a greater legacy to your kids? So, in answer to your questions, those are the 3 groups. Make sure you're going back on those people that just feel they can't afford things when really they can. Maybe they don't even have a credit score because they're older. We don't care about the credit score. We're more concerned about whether or not they paid their taxes or whatever on time, so they don't go into foreclosure later, and how much money they have in savings so that they can go through the difficult parts, or what their income is. And of course, then the second group, the millennials, the younger people, ask them about their parents, the millennials and Gen X. And then thirdly, go back in your database. How many people that you worked with in the past are over 62 and you can help them right now, and work in conjunction with Fairway. Fairway has some of those people that we can turn over to you at the same time, because we're both working with databases, and we can have you help them find a house and get their other old house listed so they can get another one. Are we better off because we got a reverse mortgage? Yep. Are you better off because you got a listing and a sale commission? Yes. But you know who the big winner is here? The clients. This is not just about your business and our business. This is about our responsibility toward helping clients. And my goodness sakes, the biggest benefit the biggest thing we can do is be a benefit to our clients. And if we are, they tell everybody else about us. And they are thrilled with us, and they're happy that we changed their lives for the better and gave them a better retirement. Let's do that together, because it's a lot of fun. It's profitable. And the biggest thing is simply, we're going to do well by doing good. Let's go out and do that together.
Love it. Love it. There's some key information there for any agents looking to increase their business. Like you said in the beginning of it, there's 3 different pathways where you can do that dramatically right away. And like you said, it's all about the client, putting them in a better situation, helping them out more. So yeah, I appreciate it. I know we're a little bit past our time here, so we'll wrap this up. I actually did just get confirmation from our director here that anybody who comments on this post and wants a free book, we will get them out to them. We will get you a free book for commenting. Harlan, we appreciate you having it here, dropping all these nuggets, all this great information. Thank you very much. It was a pleasure having.
Thank you. It was awesome to be here. And get a hold of Forrest and Tom, for goodness sakes. I mean, they know a ton of stuff. They're great guys, and they can change your business, and they can change the lives of your clients. Get with them. They know this stuff. There's so many mortgage lenders that don't have a clue. Go ask a mortgage lender, hey, how do reverse mortgages work? How can I increase my mortgage, my business with a reverse mortgage? They're going to deer in the headlights look. Well, guess what? Tom and Forrest can give you the facts. Give them a call, get in touch with them, and change your life and change some other people's lives. Thank you guys for the opportunity to talk about this. I love it, and I want to do whatever I can to help.
Yep. Thank you, Harlan. Thanks, guys. You guys have a wonderful rest of your Friday. Take care now. Bye-bye.
Bye now.